Hey there, good people in crypto land. I'm Matt Leising, and this is my podcast, Decent People. Welcome back to the conversation. On today's show, I spoke with Tim McCourt. He is the Senior Managing Director and Global Head of Equities and FX Products at CME Group. That is a mouthful, but one of the reasons I wanted to talk to Tim was because he is in charge of their cryptocurrency futures. So CME is the world's largest futures exchange, and they've had futures contracts on Bitcoin since 2017 and on Ether, which came along a couple of years later. I remember being a reporter at Bloomberg News, and when CME, when they announced that they were going to have a futures contract on Bitcoin, it was really big news. It gave a lot of legitimacy to Bitcoin, and it was seen as a sort of institutional play on Bitcoin and getting exposure to Bitcoin for more conservative investors out there who may not want to go out and buy it on the spot market, but would want to dabble in it on a regulated exchange like CME. So we talked all about that, and we talked about their Bitcoin futures contract. It has very good volumes in November. It's reaching some of the peaks that it's hit in past years when it was more of a bull market. The amount of open contracts in their Bitcoin futures complex is at $4.1 billion. So they're doing very well. We also talked about Tim's experience at JPMorgan, where he was a trader for 10 years from 2000 to 2010. So he not only went through the September 11th attacks while there, but also the global financial crisis in 2008. We talked about just risk management and about what crypto brings to the broader traditional financial world. We also talked a little bit about he's on the board of CME Ventures, which is their investment arm. So they invest in Series A and B rounds for startups. So it was a really great conversation. I've known CME folks forever, and it was really nice to talk to Tim. So with all that being said, let's get to the conversation. I hope you enjoy it. Thanks. Hey, Tim, how you doing?
Hey, Matt, doing great. How are you?
I am fantastic. Thank you. We were just speaking about it. I feel like we're getting into the part of December where I just want to crawl in a cave and not come out until springtime. So doing Monday to Friday right now has been a bit of a challenge, but how's that going for you?
Yeah, same. It's 2023. It's been a crazy year. It seems like the years are getting crazier and crazier these days. Certainly flown by. Also ready to take some time off here at the end of the year, try to relax a little bit. But certainly, I agree with you. I feel like we're not meant to be doing this grind this time of year. So it'd be good to get a little relaxation in.
Yeah, for sure. And are you in Chicago today?
I am in Chicago. Yeah, it's a beautiful day here in Chicago today. Been here all week, some meetings here. We have a holiday party tonight. Looking forward to spending some time with the team out here at CME, and really looking forward to it.
Yeah, please say hi to everybody. Say hi to Terry and Lori and Anita and all those folks for me. I missed those guys.
Absolutely. I'll give them your best.
Okay. So yeah, I thought it would be interesting and fun to start with. I know I've covered you guys at Bloomberg News. For people who don't know, I covered the CME Group for many years. It was a big part of my beat. And I learned quickly that I'm not going to ask you about prices at all. But I do remember that we could talk about what you guys are seeing in the markets and maybe a broader, higher level market analysis. So, you're overseeing, you're the global head of equities and FX products, fixed income products for CME. So I wondered, what is your take on the broader economy now and any trends? Like, are things going in an upward trend? Are we staying flat, going down? Like, are you seeing anything from the activity on the CME markets and maybe what you're hearing from your bigger customers?
Yeah, it's a great question. And Matt, you're right. Here at CME, my remit expanded back in June, where I now am global head of all the financial products here at CME Group, which cover equities, interest rates, foreign exchange, cryptocurrency, OTC clearing, as well as our cash platforms offering EBS and broker tech. So we certainly have an interesting vantage point on the market and a lot of the interactions between asset classes. And I think the one consistent theme that we've been seeing all year in the market, and I think will continue as we head into 2024, and that is risk management matters. Certainly the uncertainty in the market is increasing. The need to manage your risk is becoming ever more important for clients, for market participants. And with that uncertainty continuing on the horizon, the price of not hedging, the cost to yourself, your portfolio, your P&L of not managing that risk more assertively, more precisely, really starts to hurt in some of these markets where you can't be lazy about it. Risk management is critically important for all participants, and that is something we see across all the asset classes. And when
let me jump in there real quick.
Yeah.
And just for folks that aren't too familiar with this, what you're talking about is in the futures market. Let's say you're worried in the government bond market, let's say in the treasury market, you might be worried that the treasuries you hold, the treasury bonds that you're earning a yield on, might go down in value, right? Let's say the Fed keeps raising interest rates, right? So if the Fed raises interest rates, that typically means the bonds out there in circulation go down in value, correct?
Correct. Yeah.
Correct. If you're worried about in a rising rate environment, you would want to hedge. So you would go and buy, or you would actually sell futures, right, on the CME, so that you're selling, so you're shorting the market. So in case those treasuries you own do go down in value, the short contracts that you have on the CME go up in value, so you're protected. So that's in essence what you're talking about there with risk management, right?
That's correct. And regardless of what sort of natural position you might be holding, if you're a long holder or a short holder, yeah, the point is simply putting is as these assets and these markets are continuing to move around, futures are a great vehicle just to protect yourself or inoculate you against some of those moves. And even if it's in other asset classes, say you may have a long equity portfolio, and if you think the market might get a bit turbulent, or you would think that maybe there's a sell-off coming, futures are a great way just to sell some E-mini S&P or NASDAQ futures against it, and you can protect your portfolio and then trade out of the futures when you think maybe the market's calmed down or maybe you want to get back into it. And there are ways you can do it without having to liquidate that physical position that you're holding, whether it be the treasury, the equities. It's just a great way to manage that risk. And I think historically in these markets, the impetus wasn't there to be as on top of it. And certainly what we've seen with the likes of some of the events that have unfolded, not even in 2023, but the last few years, it's really important that the market participants are managing that risk, hedging, being thoughtful about it, and having a plan in place before you need it. And that's certainly something that we're seeing. And Matt, I think going back to your sort of question around the macro environment and what are we seeing trends in the market, is the reason why we think some of this uncertainty is not going away is if you think about the interest rate market, we've seen very fast and increasing change of pace, with respect to the interest rate rises that we've seen here in 2023. And what's interesting is you look out, for those listeners, there's a tool on our website called the CME Fed Watch, and you could go and look at what the probabilities of the Fed actions are for interest rates based on futures trading activity. And you can see that the market thinks there'll be a handful of interest rate cuts next year, maybe starting around the May meeting. What's interesting is you could also see, even if the market thinks rates are going down in the second half of next year, they also disagree on the size of those cuts. Is it a quarter? Is it 50 basis points? So even if the market is directionally aligned, they still disagree on the size or the action. And even that uncertainty on some of those moves we'll see in, we're certainly seeing continued seemingly record high equity markets. At some point, market participants think there will be a mean reversion in those markets. Can the market continue to go up? These are all things on the horizon that when you look at the tension between the strong employment numbers that we still have, inflation, GDP, like all of these macro factors are creating some tension amongst themselves about what will the Fed do, what will be the interest rate policy going forward, and that's going to affect equity, FX, interest rate markets, even the physical markets where people have real cost of capital and borrowing costs. We think this uncertainty is only going to increase, and people need to be more precise about managing that risk.
Yeah, and it's cool when you understand how these markets work and interact. It makes sense of there's a treasury rally going on right now, right? There's a lot of people out there buying treasuries because they are at an interest rate and a yield that's high. And if the Fed's going to cut rates, then the new round of bonds that are going to be coming out will have lower rates. So people want to buy the high coupon bonds. And so you can see what the market thinks is going to happen by those sorts of indications, like the treasury market is rallying, the prices are going up because people want to buy to lock in those high interest rates. And then you mentioned, and I wanted to ask you about this as well, because I did see today that the S&P is just about at the yearly high that it hit this year. Inflation is obviously a draw, or it's a drag, but you mentioned employment numbers are pretty good. And it feels to me like the numbers in the economy, broadly speaking, are pretty good, but I feel like the sentiment of people out there is that the economy is not doing well. And I wonder, is that, do you think just because of inflation, because gas prices are higher, a lot of places, food is up, but it seems like there's a disconnect. And I wondered, do you guys have any insight into that, or like any of your markets that can get into that? Or is that just more like a consumer psychology sort of question?
No, that's an interesting point. I definitely think it's a little bit of the latter, where it's more of the consumer psychology question. And I agree with you. If you look at the market levels, interest rates, GDP, there's some pretty good indicators out there. Inflation is still persistent, but it's maybe subsided a little bit from where we were not too long ago. But I think to your point, I think people in their day-to-day with rising prices, with whether it be rising rents, gas prices, or just even the cost of day-to-day activities, food, things like that, I think people are feeling that increase. So they make that connection that it feels like not strong, or that some of these markets that it may not, with the S&P about 4,600, they may still think, oh, it's not a great market out there just because things are more expensive. So I think it's a psyche or a psychology factor for the market. But what's interesting is if you look at the market more broadly, what was it? Last week, we saw a tremendous amount of activity in the markets when the CPI number came in, like 0.1 different than the expectations. It also doesn't take much around these indicators to move the markets. And I think there's a little bit of maybe nervousness or uneasiness because some of these things, the way people feel versus what they see in the indicators of their market levels themselves, I think are at odds. So it doesn't take much to get some of the markets moving, as people are, I think, wrestling with this sort of tension.
Yeah. And just lastly on this, in terms of volumes and contracts, and you have such a broad remit, you're watching over pretty much the global market. And for people who don't know, CME is the biggest futures market in the world. So when Tim says that he's got like responsibility for FX and treasuries and equities and crypto, this is a big deal. But anyway, are you seeing any inflows or outflows or anything in certain markets that would give you guys any indication of where the big players out there are positioning themselves or where they think things might be going?
No, that's a good question. Hard to say or reverse engineer as a function of trading activity or open interest what to derive what the client's view might be or what sort of exact trading view they're trying to express. But what is interesting is if you look at the volume growths, very strong November for the rates markets, where we did almost 17 million contracts a day for the interest rate complex, and open interest in some of the products continues to grow, where if you look at treasury futures, doing almost, I think it's a near record pace of almost 6 million futures contract for the year, and a record open interest of over 21 million contracts just a few days ago.
Wow.
And we also are having more and more participants come to our market. Equities is also doing fairly well. That market, the volatility has come down a little bit this year. So not surprising, volume's a little bit lighter than maybe they were in 2022. But even in the equity markets here at CME, we're still doing a little over 6.7 million contracts a day. So the volume is increasing, the open interest is increasing, the activity is increasing across all the asset classes. And I think the other thing you're seeing, which is more interesting, goes to my points around risk management. We're also seeing very strong and continued interest in all of our options on futures here at CME as well. We have futures, but we also trade a tremendous amount of options here at CME, with some of our equity options having record months back-to-back for August, September, and October, doing almost 1.9 million contracts, I believe, in November across all of our equity index contracts for options. And you look at some of the things like we have like SOFR options, which have replaced the Eurodollar options. All these options are growing. And the one thing I can say, regardless of direction or trying to ascertain what clients think the movement of the market will be, the fact that you're seeing this continued growth of options means they are expressing more views across more strikes, more maturities. They are managing their risk much more. They're trying to be precise about where on the term structure they may be trading, or how far out they're going. So options tend to be much more of a risk management vehicle, and futures maybe more the vehicle of choice to express if you just thought that market was going to go up or down.
Yeah.
The fact that you also have options significantly increasing in activity alongside futures, to me, it's both an increased risk management and people expressing more views in the market with futures, but hard to say if they think it's going up or down.
And I think that activity in and of itself is a bit of a signal, right? That means people are putting money into the market and expressing views, whatever they are. And I guess if it was flat month over month or going down, that's where you would maybe get a little worried about what would be coming economically in the bigger picture. So I think that's interesting. And then speaking of that, I noticed you guys getting into the Bitcoin stuff that you guys are doing in the crypto world. I think your futures volume in November for Bitcoin futures was around 70 billion, which is near a high, I think. And I was looking back, and it looked like at the height of the bull market a couple of years ago in 2021, that monthly volume, October 2021, was around 100 billion. In November, it was more like 80. So we're getting to that volume level that we saw 2 years ago when prices were much, much higher. So congratulations on that, first of all. And do you think, again, like with the market sentiment, are people just getting positioned here, or what do you hear from customers about why they're coming back into the market now?
So what's interesting, Matt, is we got involved back in cryptocurrency in 2016 when we introduced the Bitcoin reference rate, and we launched the Bitcoin futures in December of 2017. So it's wild to think we've been at the Bitcoin futures game now for almost 6 years, right? The 6-year anniversary is just about 10 days away here.
It's funny. I was looking at your LinkedIn page, and you had a thing about, it was the 4-year anniversary of your Bitcoin futures.
Yeah, and here we are 2 years later, right? It's like our Bitcoin futures is a kindergartner now turning 6. And and I think it's, when you look at the activity we've seen in November, I think it reinforces not only the sort of maybe the reemergence of some of the players in this space, but also people embracing CME's value proposition for cryptocurrency, where we're a market-leading provider of cryptocurrency derivatives across Bitcoin and Ether. We're the regulated venue offering regulated products. We have deep liquidity, a tremendous amount of trading and price discovery and risk management that's happening. And then you sprinkle in this movement of Bitcoin to now, above 43,000 today. And we saw very strong volume last month in November, almost 50,000 contracts across the complex here at CME, which I think was up 10 or 11%, say, versus October. But also, what I think maybe I'm a little bit more excited about is open interest. Those people actually holding a futures contract overnight or day to day, so they're not in and out, just maybe trading on a more speculative nature. But open interest averaged almost 128,000 contracts across the complex, and that was up by 50 or 60% versus October. So the fact that in 1 month you have an increase of people holding positions by 50, 60% in this market is great. I think it speaks to people want to use a regulated product to access this market, and speaks just to the ability of CME over the last 6 years to really carve out a leadership position for the market around cryptocurrency, supporting institutional clients with those regulated products in a trusted, transparent manner. I think it's just becoming more and more important in the crypto space.
Yeah, I had it that your open interest is about $4.1 billion worth of contracts in Bitcoin. We've been through, like you mentioned, you guys have been in this since 2017, basically, or you had the reference rate in 2016, but there's a couple bull and bear market cycles there. And I know you've only been in this position a little while, but maybe there's some institutional knowledge you have about, are you now getting a different class of customer that's coming to you for your cryptocurrency contracts than you did before? Or is it the same group, but maybe they're just putting more money into it? Or how would you characterize that?
Yeah, so certainly what we've seen over the years, I would say, generally speaking, we tend to be more attractive to the institutional community. Mm-hmm. The one thing I kind of caveat around that when we're talking about crypto, the institutional community also includes the sort of advent of crypto-focused hedge funds or more crypto-native trading firms and asset managers, right? So it may not necessarily be the same institutional crowd that we see in equities or rates or foreign exchange, but it still is institutions, institutional flow, professional flow. It's not you and I trading in our retail account, right? It's a very sort of sophisticated community of participants. And even those retail participants, broadly speaking, that we have at CME tend to be the sophisticated, active individual traders. So I would say the personality hasn't changed too much over the years, but we have seen more and more customers adopt the product. It's taken a lot of firms several years to get the internal approvals to trade crypto or to deploy their strategies. A lot of the firms want a year or two of back testing of a strategy or sort of watching it in production, so to speak. So we're seeing a lot of firms come online. And I think the exciting thing for me was not too long ago where you really then had some of the asset managers getting into the mix with the introduction of futures-based Bitcoin ETFs in the US with the likes of ProShares product that's out there. Then you have others like Valkyrie and Bitwise who have moved to futures-based products for Bitcoin. We have some Ether future-based ETFs as well. So you think about it, you'd have some of those like wholesaler institutional clients taking those last steps to figure out how to bring crypto in their product wrappers to market. So that is something that has continued. It's picked up pace. The sort of client pipeline and demand we're still getting is great. We're having a lot of clients across all segments reach out to us like, how do I trade crypto futures at CME? How do I trade more? How do I trade options? And then of course, we always get the question, can you trade more crypto futures at CME? Which is always a great question, but for now, we are focused where we have that regulatory clarity and certainty. So just Bitcoin and Ether for now at CME. But in general, very strong demand from clients. And I would say the last several months, the maybe enthusiasm is picking up a bit. The price always helps with it, but I also think it's chatter of the spot Bitcoin ETF coming online in the US, maybe getting approved, would be great for the ecosystem and great for our markets. So I think it's a combination of maybe coming out of the bear market for crypto, some enthusiasm, and people just continuing to get more and more comfortable with the asset class.
Are you guys seeing like pensions or insurance companies come to you for exposure to crypto?
Oh, that's a good question. We don't always have complete line of sight for some of that part of the asset management community in terms of I can't see exactly what client is holding what position.
Right. I ask because to me, that seems to be like the most traditional and maybe the most conservative sort of side of institutional investment.
No, exactly. I would say so. We've had some conversations with pensions and insurance. I think sometimes it's maybe out of curiosity. I think some are trying to figure out, especially if you look at the insurance space, should they have longer term products? And they're always looking for product innovation as well, if you think about some of that space. So they're certainly engaging, but I don't necessarily know for sure one way or another if any of them have actually pulled the trigger with futures just yet.
Okay. And then you mentioned that you're, for the moment, sticking to Bitcoin and Ether futures. One thing listeners might not know, the contracts at CME are cash settled. So if you went and bought a Bitcoin futures contract at CME and you went long, if you held that to expiration, you wouldn't actually receive Bitcoin. You would receive the cash difference between whatever price you bought at and wherever the price settled. You would just get that in cash. I'm curious, are you having any discussions about a physically settled product where investors would potentially be able to actually get Bitcoin if they held to expiration?
It is something where I'd say the topic of physically delivered futures certainly has ebbed and flowed over the years. The way we approach it at CME is we don't see it as an either or choice. We think there's room for both in the market. You've seen that in some other asset classes as well. But our current contracts, as you point out, Matt, do financially settle against the Bitcoin reference rate and the Ether reference rate, which we maintain with our partner, CF Benchmarks. And the physical products, though, I would say we're getting increasing questions from clients. I think similar to my other comments about the upwelling of enthusiasm that is resurging here.
Yeah.
But we'll continue to engage with clients and see if it makes sense for them. How would it work with our existing clearinghouse operations and the way we trade on the exchange? So we're talking to clients about it. No imminent plans, but I would say it is something that has picked up in terms of client interest the last few months. And it had been maybe a topic that had gone cold a little bit before that. So engaging with clients, but certainly that is something we could look at because it's still in the Ether and Bitcoin lane, so to speak.
Yeah, and it's complicated as well, right? You might not think so, but custody in Bitcoin and digital assets is tricky. And I think your biggest competitors, probably ICE, Intercontinental Exchange, they, as far as I can see, haven't had much success in their effort to physically deliver Bitcoin with their Backed. They spun out a company called Backed, and then they were offering physically delivered Bitcoin futures. So I know you probably don't want to talk about ICE a lot, but am I missing something? That I'm pretty sure that didn't really ever take off.
Yeah, that's right. That's right, Matt. And what's interesting, and just my observation, the way we think about it is, you're right. There are challenges around custody and holding it with respect to the underlying digital asset. So I think the area that we dive into with clients is, what is the right way to do it? Do you want that sort of single point delivery, which is the way I would maybe describe the Backed approach, is that you have to custody there to trade the future? Or if you look at some of our markets in other asset classes, say like metals or grains, do you have more like a consortium of custodians or multiple delivery points such that you could allow people to custody where they want at their choosing, and then maybe pair off via delivery receipts? So those are the things that we're trying to figure out. And I think my general approach to it is similar to the way we even designed the index underlying the financially settled future. Is it needs to be a solution that's flexible and can flex as the underlying market itself figures out what it wants to do with custody. That's something that I think will continue to evolve. So your solution has to flex with that over time, or meet clients where they're at. If they prefer holding at custody A or custody B, or maybe even self-custodying and holding their own keys and wallet, you need to make that work for everybody versus making someone only show up at one delivery point or one warehouse or one custodian. I think that lack of choice may be a fatal flaw for a product design.
Yeah, and it seems like that delivery risk is also something maybe unique to digital assets, where if I'm custodying your Bitcoin and I know that I have the private key and whatnot, if I screw that up, it's lost forever, right? And you don't lose a silo of grain or a barrel of oil as it's going to delivery. They don't just get lost and disappear.
No, that's right. Yeah, there's certainly complexities and nuance.
Yeah, there is that risk of just like screwing something up somehow, where the key is compromised or something happens, and then you just can't have access to that Bitcoin any longer. So that's always struck me as like also just a really sticky part of this whole discussion.
Absolutely. And you think about it, the folks in our clearinghouse are great here at CME. We're experts in a lot of other physical delivery spaces, but you're right, Matt, where, cryptocurrencies and physically settling Bitcoin and ETH, it does just introduce new things. And the questions that we have internally when we think about the product development are, what part of the risk do we want to assume in our risk management capabilities here? Or how do we partner with custodians who might be better experts at other parts? Like, where do we partner with custodians? Where do we partner around delivery process? How do we maintain those standards versus what do we do in the proverbial four walls inside the clearinghouse? Understanding those risks and where we can serve the needs of clients versus where others may have different preferences or things like that. Figuring that out also is a big topic for us as we kick this around internally over the years. And it's not something that we have a clear answer on if we want to be in the sort of the business, so to speak, of managing private keys, right? It's a pretty critical undertaking, and we're not sure that's something we want that responsibility to risk manage, or is that something the client should risk manage on their end or manage through their custodian? So all great questions, but I think that's sometimes people are like, oh, just roll out the physical contract, no big deal. And you're like, well, actually, there's lots of interesting things to figure out first.
Yeah, for sure. All right, cool. So I'd love to go back a little bit into your life. Did a young Tim McCourt think that he'd be the senior managing director, global head of equities and FX products at CME Group? Or what were you doing as a kid? And were you always interested in finance, or was your kind of, what were you into as a child?
That's great. When I was real little, I definitely didn't think I'd be working in finance. I think my first memory of like career aspirations, I wanted to be a chef. Oh, yeah? When I grew up. And then I got a little bit old. Yeah, I love to cook and still cooking all the time. Mm-hmm. Love to cook, love to go out to eat, restaurants, all that. I'm a big foodie, big fan of food and cooking. But it's definitely a hobby.
Between New York and Chicago, you got two great cities there.
That's right. Food. That's right. And then it's like in high school and college, I went to Boston College. I was a political science major, liberal arts. And I originally thought I was going to go to law school. I wanted to be a lawyer, wanted to maybe go into politics. And just like over time at BC, I realized and started doing the math of what it would take financially to go to law school, and then maybe what lawyer I'd have to be to pay back that debt on the other side. And I was like, well, I'm not sure this is for me. I graduated in 2000, so this was the height of the .com era was still around, the war for talent between Silicon Valley, tech firms, banks, Wall Street. And I was fortunate enough to get a job at JPMorgan as a rotational analyst when I made the decision to go into business versus, say, law school, and started at JPMorgan in July of 2000 in one of their rotational analyst programs, got exposed to equity derivatives, fell in love with it, fell in love with the markets. And like the rest is history. It certainly wasn't something that a young Tim McCourt was aspiring to be a derivatives guru at the Merck.
Yeah. And so you were at JPMorgan from, I think, 2000 to 2010, as you said. So first of all, there was the September 11th kind of effect on markets and the economy. And then you went through the Great Recession and everything, the 2008 housing crisis. So you went through two really tumultuous times there. What did you take away from those experiences? And as I recall, even in New York, post 9/11, I moved there in 2004. So I'd say from 2004 to 2008, there just seemed to be money flowing in the streets in New York City. Like things were really crazy. What was it like being inside JPMorgan during those years?
Yeah, it was great, to be honest. Certainly the markets were crazy. I lived in Manhattan for about 18 years, right? So having been through a lot, both in the city and in the markets, it was a fascinating place to get to start my career, to learn from others. At the time and still today, JPMorgan was a preeminent derivatives house for equities. I was learning from some of the brightest and best minds in what was a burgeoning part of finance at the time. Like equity derivatives was having their moment in that late 90s, early 2000s, and just having a front row seat to seeing how the markets operated from that perspective was fascinating. I think that's what's really got me hooked on the markets was the energy, the pace, the risk management, the risk taking, like all of that was infectious at the time. And what was interesting to a point when we were going through, if you think about like maybe the sort of liquidity and credit stuff that maybe started in summer, fall of 2007, and then into the global financial crisis, then having like a front row seat, seeing some of that momentum come out of the market and the global financial crisis and places like Lehman and Bear going under. And I had friends that worked there and like the impact on the industry, but the city itself. And it was really fascinating and wild when you think back to it in hindsight, where some of us even today here at CME, when we talk about it, we're like, what's so crazy is absent the last few years, people thought like markets only went one way, right? Like equity markets only went up. Interest rates only stayed at flat, right? And we're like, buckle up, everyone. These things have happened before, but there's almost an entire generations of traders that haven't seen some of this.
I was just going to say that. There's almost an entire generation where interest rates are at near zero, and that's crazy.
It's fascinating to see it start, that risk and that uncertainty come back. Because you're like, oh yeah, I've seen this before. And it just makes you appreciate markets as an entity, as a proverbial living, breathing thing. It's like, they can do some pretty fascinating things, and it's very hard to predict what it's going to do. But I was very fortunate to learn from some great people at JPMorgan. I loved my time there, and I look back fondly on it and still keep in touch with a lot of the folks that I started my career with and some of my mentors from back then. So it was great. Very fortunate that I had that experience.
Do you remember there was a day in September or October of 2008, I think, Congress didn't pass, it was TARP, I think, and the market, the S&P just fell off a cliff. You must have had a hell of a day that day on the equities swaps desk there.
I remember, yeah, because I can remember. I know exactly what you're talking about. I had this very vivid memory of, I think it was one of the few times the trading floors were not tuned to CNBC, Bloomberg TV, whatever. It was like C-SPAN and people watching a vote, right? Yeah. And you watch like the yays and nays happening. And when it became clear it wasn't happening, people were like, it like proverbially hit the fan. But I was like, whatever it was, I feel like that was if you were to chart viewership on C-SPAN in the island of Manhattan, it's got to be an all-time peak that day.
Yeah. That was one of the few times I felt it in my gut. Like it just like the fear of watching it on the Bloomberg terminal as the S&P it was literally just a straight line down. I think it was several hundred points, maybe even 800 or 1,000.
Oh, exactly. It reminds like the proverbial falling knife, right?
Yes. And for the S&P, that's insane. It's a huge move. Okay. And then I wanted to ask, like, you were on the equity swaps desk, right? So this is an over-the-counter product. Did you get, obviously, part of the financial crisis was exacerbated by credit default swaps and the nature of how was an unregulated market. And when everything got bad, nobody really knew where the risk was. Was that in the equity swaps market as well as like some of the other credit derivatives and things like that?
Yeah. So I was on the equity swap desk. I was a Delta One trader, so also longtime customer of CME before I worked here, trading futures, ETFs, swaps, cash baskets, everything. And I don't think it was the same, at least from my vantage point at JPMorgan, and then when I was at Royal Bank of Scotland as well. It didn't really see the same thing because the equity swap products, even OTC, were with large institutions. They were key core exposures to the major benchmark equity index products. I don't think it was the same sort of structural issues that you saw in maybe some of the credit default swaps or some of the other factors that led to the financial crisis. Certainly, a lot of that was traded on portfolio credit and things of that nature. So there was always risk that you always have to manage those risks as a market participant. But what my big takeaway from being a swap trader and seeing the global financial crisis and then living through the Dodd-Frank formation was one thing that I found so exciting about CME. And when I moved here in 2013 was you can go from being a participant in the market as a sell-side trader at a bank, or I can go to the market and help drive some of these innovations and changes. And how do we get the equity swap market out of OTC to a centralized, lit, cleared venue at CME, right? And a lot of that was my source of inspiration for product development, leading the team of what are some of the transactions or the transactional handshakes we could bring from the OTC market to the exchange. To me, that was more foundational for me, was realizing that I thought the banks had a tremendous vantage point to that. And then I started looking at the exchange. I was like, as opposed to being a taker of the change, now I can help drive the change. And I think that was like a big takeaway for me, almost that epiphany of, hey, like some real foundational things are about to change in these OTC markets.
Yeah. Well, going back to that period around 2013, I think that's when Bitcoin started to get into the common parlance or to break through. Do you remember your first time coming across it and what you thought of it back then?
It's a good question. I don't remember per se the first time I heard about Bitcoin. I think it was probably more around 2014, like maybe late 2013, 2014. It was definitely at CME at the time, where I started hearing more about it, reading, and I was like, oh, this is interesting and exciting. But I still am not, despite leading cryptocurrencies, I wouldn't consider myself like a Bitcoin maximalist or anything like that, or like believing in the original ethos that some were saying that this is the answer to central banking and financial crises and stuff like that. To me, I was always more fascinated about like, well, what is it? What is the technology? What is the protocol? That's where I got more interested in it. I'm like, oh, this could be something. And then as it gained momentum, I was like, oh, this is definitely going to be something. And I was like, hey, we should get involved. We should do something around this. But It's more of a slow sort of building interest versus being all in on the craze early on. Now, Matt, I'll be honest, if I had a time machine, I wish I was all in early on, but maybe an investing and trading perspective. But I would say more like curiosity that then came into really being fascinated by it.
Yeah, my son was just asking me that same thing. I was telling him that I've been doing this for a long time. And he's like, why didn't you buy Bitcoin? I was like, I didn't quite get it back then.
Exactly. Yeah.
And I just got to ask you, this is maybe a funny aside, but I've known Terry Duffy, who's now the CEO at CME for a long time. And I know for a fact that he did not get crypto at all and thought it was whatever. But I guess he had to come around at some point because you guys have these very successful products now. If you see Terry, just let him know that I remember that he used to be totally anti-crypto and thought it was all a bunch of hot air.
I'm seeing him later today. I'll remind him.
Okay, yeah, good. One thing about your past that I liked that popped out at me was that you were an Eagle Scout. What did you do for your Eagle Scout project?
Oh, wow. Great question. Yeah, I'm an Eagle Scout. I actually became an Eagle Scout when I was 13, which is a little bit younger than most. And my Eagle Scout project was organized a beach cleanup. I grew up on Long Island out in North Babylon, and we did a beach cleanup at a town of Babylon Beach. We actually did it at Gilgo Beach and Overlook Beach, which are two beaches out there. We did a cleanup and we planted snow fencing and beach grass to help with erosion, which that was a big topic back in the 90s for the South Shore beaches of Long Island. And I was a member of Troop 175 in West Babylon, New York, and they're still around. And yeah, it was a great experience and something that I still remember to and point to. And sometimes, Matt, people ask me, they're like, why do you have it on your LinkedIn profile? I haven't had to circulate my resume in a long time, but it's still on my resume to see me. I was like, because one, it's something I'm really proud of. Mm-hmm. It's something that was foundational to me as a leader. As a person, I'm still committed to service and volunteering and doing good things. And I still have very fond memories of scouting. And it's also something, though, that if you find someone else who's an Eagle Scout or was involved in scouting, it's a great connection. So I'm like, why not put it out there? I'm not the only Eagle Scout. There's lots of us out there. But yeah.
I'm sure John Lothian.
Yeah.
Have you ever done scouting stuff with him?
No, I haven't. I'll have to bring it up next time I'm with him.
Yeah.
We can hit a jamboree together.
Yeah, there you go. I was also interested, you are part of the CME Ventures Investment Committee, and that's where you guys, you basically invest in startups, right? And kind of at seed round level. Are you, I'm just curious if you're seeing anything interesting there in the crypto space or where you guys are deciding to put your money these days into that area.
Yeah. I'm one of the investment committee members for CME Ventures, which is a great part of CME. We typically get involved a little bit later than seed round, maybe like Series A, Series B, when the companies have a little bit more demonstrated success, let's say, or more viability. We like to partner on proof of concepts with them before we invest, but certainly seeing lots of great ideas. The one thing I will say, though, that's been interesting is even not that necessarily we are ramping up our investments or anything like that. We have a pretty steady portfolio right now, but always trying to make sure we have our finger on the pulse. I think what I found more fascinating, if I could use that word, was the speed at which some of the VC money almost like holistically has started to dry up around some of the crypto projects. Mm-hmm. I think that there's been some tough funding, and I think trying to maintain viability, I think, is getting a little bit more challenging for some of these companies out there, seeing some of them unfortunately have to shutter or close their doors. They can't get that additional funding round, or they can't get to that over that line of profitability. And I think that's just a function of the markets generally speaking, but also with some of the other sort of events in the crypto space and some of the things that have happened. It's just investment money. And I could be completely wrong, but it's just my perspective on it.
No, I think you're right, because
it's dried up a little bit.
Yeah, if you look at FTX, for just one example, had a long list of VC investors. I'm sure a lot of the crypto credit firms that went under did as well. And that's just a little part of what happened.
And notwithstanding the events of FTX and crypto, but if you look at it more broadly, the crypto industry as a whole is still relatively early days. And it's not uncommon as new industries and new business and new technologies are coming online that you're going to have sort of these life cycle events where I do also think that some of this could be like the proverbial cleaning out of the underbrush. Some of the bad actors have been, markets are efficient, they've been dealt with and run their course, and some great things have happened, some bad things have happened. And then it's like, all right, the next phase. So what's going to be the next innovation or next company or the next great thing that comes out of it now that some of that underbrush has been cleared away? You see this life cycle of nature, so to speak, happening in other industries. And I think so that's where we are in crypto too. So I think it's not over forever. I just think people maybe hitting a pause button on the funding, people being a little bit more cautious, a little bit more conservative. But I think on balance, that's going to be a great thing for the industry, because it means when those next great good ideas or companies come up, or the next technology, the next protocol, people will be ready to get re-involved. So I think it's just cyclical right now, but seems a little bit less enthusiasm than a few months back.
I agree. I think it's like a fire, right? The fire goes through the forest and burns out things, and then there are certain seeds that need that fire to grow. And I hate to be a killjoy, but with the prices going up recently, I just don't see a really big foundation for that. I think there's a couple things out there, like you mentioned, the cash, the spot Bitcoin ETF, but We've known about that for a very long time. There's a couple other things happening, but I don't know. This rally just feels like it's a price rally to me, and it doesn't necessarily feel like it's got a great foundation to it. And
I agree. Feels like it might be fueled a little bit by hopes and dreams, right, so to speak. But I think it's true, because I think the other thing that we talk about here at CME with clients, and we've certainly talked about it in the marketplace more broadly, is I think if you look at cryptocurrencies, what's happening is certainly last few years, a lot of activity, a lot of hype, a lot of participants, but it was all speculative trading. Like, people were trading the price move. They didn't care what the token was, what the asset was. They were just like buying it at 1 and selling it at 2, right? Or whatever it might be. It was just getting in on the craze because these things could double, triple, quintuple in value. So it's all speculative. I think what you're seeing more broadly now, and why you're still seeing Bitcoin and Ether have staying power, is I do think the market and participants foundation are asking, what is the use case? What utility does this protocol, and therefore token or coin, provide in a way that there is some inherent feature, value, utility provided to the marketplace? I think people are asking more interesting questions like that. I think that's why you still see interest around things like tokenization or the incorporation of DLT or blockchain technology. So I think people are saying, all right, the spec case is done. What's the use case? And I think that's something that we're seeing the market also collectively noodle on, right?
Yeah. And Ether, the use cases there's many, but I still don't understand why people don't understand Bitcoin and its value, because if you look at it at a very basic level, it is a permissionless global payment system. That's huge. And it's something that is unstoppable and uncensorable. And some people don't like that, but other people, there's a need for it. And just having that kind of global payment system that is accessible to anybody with a Bitcoin wallet, I find that amazing. And I'm not sure why people are saying there's no use case for it. Like, where's the killer app? Or I want to buy a cup of coffee with Bitcoin. It's, why don't you how about sending money across the world in 10 minutes? I feel like.
No, I so agree. It's so fascinating too, where the other thing when you think about Bitcoin is, like, the other things that have always resonated to me is not only like the global payment aspect, which is fascinating. You think of some of those early, you probably all find them on YouTube now in these days, where it's like, someone saying like, how fast can I send Bitcoin versus a wire versus bringing cash to somebody on a plane, right? Going through, 10 minutes I could send money around the world is amazing. But I also am always fascinated by the concept of maybe to use an overutilized phrase, but like the banking for the unbanked, or like the portability of wealth, right? When you think about some other parts of the world, if you had to flee, and back in the day, it would be duffel bags or suitcases of paper fiat currency. And at least now, if you really need to flee a jurisdiction or a country, or something was happening that you needed to leave or move quickly, take your Bitcoin with you, in your pocket on your phone, or just access it from somewhere else. So to me, it's also this idea of the portability of wealth, banking for unbanked. Those are things that I think aren't fully tapped into yet, but I think end state, those are some of the things that I always find super interesting about Bitcoin itself.
Yeah, I agree. That's a really interesting point. Tim, this has been fascinating. Thank you so much for sharing your time and your insights and what you guys are doing at CME. Good luck to you guys going forward. Well, just tell people how they can find out more about you or about what's going on at CME Group.
Yeah, Matt, thanks for having me. It's been a great conversation. Really enjoyed catching up with you. For any and all information, certainly a great resource is our website, cmegroup.com. You could always reach out to me. My email address is tim.mccourt@cmegroup.com. You can also find me on X, formerly known as Twitter, if anyone's still using that, at Tim McCourt, CME. Always happy to engage with folks out there, answer questions, whether it's about crypto, finance, or the exchange more broadly. Always happy to help. CME Group is a great place to work. It's a great institution. And if people are not familiar, I just really encourage them to head to our website and find out all the great things that CME is involved in.
All right. That's awesome. Thank you, Tim. And have fun at the holiday party tonight.
All right. Thanks so much, Matt.
Okay. Bye-bye. That's it for this episode. Thanks for joining us. And don't forget to rate and follow this show on Apple, Spotify, and Amazon Music. Decent People is a production of Decential Media. It is produced by Matt Bogart with music by Brian Duncan and Kareem Imes.